From the statement given, Mr. Ahmad did not declare his income to LHDN, which resulted him to tax evasion, financial penalty, and no financial transparency.
So here is the responsible of taxpayer. First, income declaration. Taxpayers are required to accurately report all sources of income such as salary, rental earning, business profit, dividend and any other income received during the tax year. This ensures transparency and compliance with tax regulation. Second, self-assessment system. Taxpayers are responsible for calculating their own taxable income, including allowable deduction and relief. They must complete and submit the tax return to the Inland Revenue Board or LHDN based on this calculation. Third, filing tax return. Tax return must be filed annually by specific deadline. For individuals without business income, the deadline is typically April 30, while those with business income have until June 30. Proper preparation and submission of documentation are crucial to avoid penalties. Fourth, keeping accurate record. Taxpayers must maintain detailed record of financial transactions throughout the year. These include keeping receipt, invoice, bank statement, property acquisition document, and record of investment income. Accurate record facilitates the preparation of tax return and help in case of audit. Fifth, paying tax on time. Taxpayers must pay tax by the due date to avoid penalties and interest charge. Taxpayers should plan their finances according to ensure they have adequate funds available when taxes are due. Sixth, which is lastly, voluntary disclosure. If a taxpayer discovers error or omission in their tax filing, they have the option to make a voluntary disclosure to the IRB. This involves correcting the mistake and paying any outstanding taxes. Voluntary disclosure typically results in lower penalties compared to those imposed during an audit.
According to LHDN Malaysia, a responsible taxpayer under self-assessment system, he should first pay attention to his tax liabilities. As a taxpayer, he must calculate his tax liability according to his income that he should have declared. This should apply tax rates, exemptions, deductions, and credits following the tax laws. Next is tax payments. All tax owed must be paid on time following the due date, this whether paid in installments or lump sums. Paying tax can be paid by many methods like doing bank transfers, checks, or any online payments. Furthermore, is tax filings. It is the taxpayer's responsibility to compute the tax liabilities and report their income. By a certain date, annual income tax returns must be filed. Furthermore, all income sources, deductions, and any applicable tax credit should be included on tax filings. According to LHDN Malaysia, a responsible taxpayer under self-assessment system, he should first pay attention to his tax liabilities. As a taxpayer, he must calculate his tax liability according to his income that he should have declared. This should apply tax rates, exemptions, deductions, and credits following the tax laws. Next is tax payments. All tax owed must be paid on time following the due date, this whether paid in installments or lump sums. Paying tax can be paid by many methods like doing bank transfers, checks, or any online payments. Furthermore, is tax filings. It is the taxpayer's responsibility to compute the tax liabilities and report their income. By a certain date, annual income tax returns must be filed. Furthermore, all income sources, deductions, and any applicable tax credit should be included on tax filings.
First, filing your tax return. As a taxpayer, you are required to file an annual tax return detailing your income, deductions, and tax credit for the year. The process includes the following steps, which is obtaining the correct form, declaring all income, claim deductions and relief, calculating tax payable, and submitting the return. Secondly, supporting documents. While submitting your tax return, you must maintain these records for a minimum of 7 years. These documents include bank statement, receipt and invoice for claim deductions and expenses, rental agreements, investment statements, and EF forms. Self-assessment. Under the SAS, you are responsible for self-assessing your tax liabilities by declaring your income, compute the tax due, and make payments accordingly. Secondly is LHDN review. After you file your return, LHDN may review it to ensure accuracy and completeness. The review process involves doing initial review and detailed audit. In notice of assessment, there is due, which is any additional tax that you have based on their findings. Secondly, penalties. Penalties is applicable for underreporting income or errors in the return. Third is refund, any excess tax paid that is refundable to you. Number 4 is objections and amendments. If you disagree with the assessment, you have the right to file an objection, provide supporting documents, and make a negotiation. Next is amendments to return. If you realize there are errors in your previously filed tax return, you can make voluntary disclosure by informing LHDN. Secondly, amendment period. Amendment can be made within 6 months from the filing deadline. Third is supporting evidence. By submitting the correct information to justify amendments. Next is finalizing the assessment. Once all reviews, objections, and possible amendments are completed, the assessment is finalized and you must settle any outstanding tax liabilities or receive your refund as determined.
Next is amendment with tax return. With effect from 1A 2009, the taxpayer is allowed to amend their tax return within 6 months from the date of submission of such tax return to the IRB. The amended return shall specify the additional amount of chargeable income, the additional amount of income tax payable, the particulars, and the late payment penalty. The taxpayer is allowed to make self-amendment on information or assessment in the income tax return form, ITRF, submitted to IRBM on time by submitting an amended return form, ARF, within 6 months from the due date for submission of ITRF. Taxpayer is, however, allowed to amend their return once only. The taxpayer is allowed to make self-amendment on information or assessment to correct mistakes in the ITRF relating to income under declare or not declare, expenses or other claims or overclaim, and capital allowance or incentive or reliefs and overclaim. The submission of the amended return is deemed as notice of assessment. Any tax and penalty shall be due and payable to the tax authorities. Next, we move on to the offences and penalties. There are 24 types of offences and penalty without prosecution and penalty with prosecution. For the payment of the income tax, they have two types of offences, which is pay tax after 30th April and pay tax after 30th June. So the penalty will be starting from 1st January 2020. It will be 10% increment from the tax payable. For the estimated income tax, they also have two types of offences, which is pay installments after 30 days of the date set with penalty 10% on installment due and actual tax 30% higher than the revised estimate of tax with penalty 10% of the difference in actual tax balances and estimated tax made.
Here is a bill of taxpayer. First, notice of assessment. Taxpayer have 30 days to appeal after receiving a notice of assessment from the Inland Revenue Board. Timing is crucial because appeal must be made promptly to initiate the process. Second, Form Q. Appeal begins with submitting 4 copies of Form Q to the relevant IRB branch. Form Q should be include detailed ground of appeal, issue to be addressed, and other required specific. Third, supporting documentation. Taxpayer is ensured to provide all relevant documents to sustain the appeal, including receipt, financial record, and any other evidence relevant to the case. Fourth, appeal hearing. ACIT, Special Corporate Income Tax, schedule a hearing where both the taxpayer and the LHDN present their argument. Taxpayer may choose to be represented by a tax agent, legal representative, or represent themselves. Lastly, decision and further appeals. If taxpayer dissatisfied with the ACIT decision, the taxpayer can escalate the appeal to the High Court and subsequently to the Court of Appeal if necessary. Each level of appeal involves careful consideration of cost and potential outcome.
In conclusion, it is important to understand and comply with the tax obligations to avoid future penalties and ensure a smooth relationship with LHDN. As a taxpayer, he is responsible for accurately declaring all income, maintaining thorough records, and filing his tax return on time. By adhering to the SAS, he takes control of calculating and declaring his own tax liabilities.